From Wall Street to managing hundreds of millions in client money, Nick and I use our alphabet soup of credentials to discuss the investing and tax strategies that actually work. Oh, and we played Division I college football together, so strap in. This one hits hard. Let's go.
Alrighty, folks. I believe we are in the largest stock market bubble ever. This is according to, of course, the Warren Buffett indicator. We're going to talk about something Paul Tudor Jones said recently and Michael Burry. We will, of course, then jump into Mayor Mamdani, and we will close out talking about inflation print tomorrow on Tuesday. It will be market moving, and I actually think there's a sneaky thing coming. But, of course, we're going to have this conversation with Taylor from Life Goal Investments. How you doing, buddy?
I'm pumped. This is a stacked lineup today. Let's get into it. I'm not going to waste any time. Appreciate you having me. Let's do it.
Yeah. So the first thing I want to talk about, and really I want you, frankly, to walk me back from the edge. Right. You know my story. I grew $7,000 into $200,000 only to be wiped out by 80% in the stock market crash. I will freely admit I have PTSD from that, and I may be reliving it right now, and it may not be warranted. I may just be an old fuddy-duddy who doesn't know stocks. And but I got to tell you, when we got Paul Tudor Jones on Squawk Box saying current environment feels very similar to 1999, we got Michael Burry saying stocks no longer react to logical economic data, and of course saying the stock market feels like the last few months of 2009 and 2000. And of course we got the Buffett indicator, which I think today is at 245%. I think it peaked at 187% in the dot-com crash. So please, tell me why I have PTSD and I shouldn't be concerned about this wild bubble in the stock market.
That's the only stat you can come up with that we have to juggle with. I mean, you just pummeled me there. It was like, you get me up against the ropes, man. No, you know what? There is some irrationality and there's some rationality, I think, playing out in the market right now. I'll start on kind of the irrationality side of just kind of headlines, what's going on. So it does seem like the Iran war is certainly a topic that is rightfully so getting every headline right now. And it seems like the market is reacting to the positive side, but just not reacting to the negative side, right? So what's going on with the blockade? And we were going to allow ships to go through on both sides, the US and Iran, and now neither side are going to let them go through, and the market doesn't care, right? And it does seem like what's interesting is that bad news seems to come out in the beginning of the week, and good news seems to come out towards the end of the week. And so the market, I think, is just kind of
calling that on my channel every week.
Yeah. I think it's just looking through the bad news and saying, listen, it's going to come back around. We're going to get some good news at the end of this week. Yeah. So
by Wednesday afternoon, it'll be fine.
Yeah, exactly. But it has been an absolute euphoric run. So I think the date was March 28th, where the market just decided that this war doesn't matter. Which kind of simultaneously led right into earnings season. So it was kind of twofold at once, where the market said, okay, this thing doesn't matter. And from that March 28th date, we've now run up about 20% from that bottoming point. So it's been about 40 days, and you've seen just a ginormous move off the bottom there. And so there's no bad news that can seem to wrangle this market at all from a war standpoint. But really, I think that's because the earnings that have come through have been so darn strong, to be honest. When you look at the earnings numbers year over year, as of right now, we're about 80% through earnings season. You've got 28% year over year earnings growth, which is the highest number we've had since 2021. And just for the record, 2021, granted it's only 5 years ago, but the only reason why it happened in 2021 was because we were looking against the backdrop of 2020 during COVID. You have to go back long before that, before you get another 28 handle. And so the companies are just really, really, really producing. And I think that that's why you look at some of these comments like Paul Tudor Jones, and if you dig into his comment a little bit further, he said, yeah, it's feeling like late 90s, but I also think these hyperscalers have another year or so to run. And so it's all dependent upon that CapEx. That CapEx on build out of AI is what's driving our entire economy, very literally. So
let me just poke at that a little bit. Again, I understand it. I mean, they're talking billion. The other thing about the hyperscalers I'm reading, and again, you're the stock guy, I'm not. But given these capital investments, they're essentially going to be cash flow neutral, right? For the
Correct.
longest time, these hyperscalers printed money. I mean, like real cash.
Yep.
They're taking on so much debt now, it's going to be a zero. There's no cash there anymore. Isn't that a burgeoning problem, or it's just overblown?
No, it can be a problem, right? If they don't have a clear line of sight. So like you look at the biggies, right? And Meta is certainly separating in a negative way. And that is because one, they're spending more than anybody else. But more importantly than that, when they ask Zuckerberg, like, what are you spending this on? He is the only one that doesn't have a very clear, definitive path as to what they're using that money for. And that's why Meta is just getting lambasted in the market relative to the other hyperscalers who now have gone back to nuclear in the positive direction. Zuckerberg doesn't really, he cannot articulate what he is doing with the build out of the large language models, et cetera. And he really doesn't have a great dog in the fight at this point. The market can't perceive what it is that they're looking to do, and they've crushed him because of it.
So the other thing I want to talk about with you is, again, aren't we more than 20 tech companies? I don't know if the number's 20, but it's some finite number, because I hear Whirlpool, right, talk about recession level consumption. We have the Heinz CEO, Ketchup, talking about consumers running out of money. And I don't get it. I thought we were a 60% consumer economy. Are these guys just spending so much money that it just masks all that, or what's going on?
Yes, that's the answer.
It's just that simple.
They are. Yeah.
Okay.
So that's the answer. The other part of the answer is that it's a very K-shaped economy. Like, let's be clear. The bottom half, bottom 80%, 60%, 70%, whatever that number is, is really struggling. And this feels so disingenuous. I grew up in a one red light town, like, you know, about as blue collar as it possibly could come. It doesn't matter what that part of the economy is doing from a stock market perspective. It really doesn't. It's so bad to say. The stock market doesn't care because all of the spending comes from the top half of the K. And so now you've got the economy not really sputtering as much as it could with the inflationary pressures that we've seen. So the bottom portion is certainly being impacted with having to spend too much on gasoline and things like that. But the top portion, as the stock market continues to go up every day that's open, we're up 8 straight weeks now. Is the market up?
Yeah.
Yes, if it's open. That's effectively what's going on right now.
Is the market open? Oh, let's say, it's up. Yeah, exactly.
Yeah, it's open. Yeah, so it's up. And so everyone that has exposure to stocks in America is getting richer and richer by the day, it seems. And by no means do we have.
This is just the wealth, and then you have the wealth effect, right? That just spins off, and they buy cruises on Viking, and right, they take trips and travel, and it just own assets, or you're left behind, I think.
That's exactly right. Yeah. And the market hasn't made you be too awfully discerning, right? In what assets that you own from a public stock perspective. Most things have worked, right? Some things have worked better if they're the hyperscaler than software has been beaten up, but software had an incredible run for 15 years. So just being there and being present, staying around in the market, time in the market has really, really rewarded folks.
Yeah, at the end of the day, I think I'm very much with Paul Tudor Jones in that, yes, this is stock market could be irrational for a long time. It could be, I think the old quote was, the stock market can be irrational longer than you could be liquid, something like that. And
the stock market can be irrational longer than you can remain solvent. That's a warning against shorting the market. Yeah. But yeah, so like there does, when everything is euphoric and everyone is optimistic, there certainly things can get ahead of themselves. So like one of the headwinds that we're going to face going forward right now is that the expectation for earnings for the entire tech sector for this year, earnings growth of 38%. 38% is what the average analyst is expecting tech earnings to grow at.
Has it ever done that?
I don't know the answer to that. I'm assuming probably back in like the 90s. At one point, probably
early
did.
2000s.
Yeah, or any period where you come off.
Not in the last decade.
No. And so at the end of the day, it's like this is all an expectation game. I did a reel on Instagram. Sure. It's like, hey, you're expecting Jennifer Aniston to walk through the door, and when Sydney Sweeney comes in, who's 1B, maybe you're disappointed. It's like tech can still have great earnings, but 38 is the hurdle.
Right. I got you. So again, the other thing I've learned about the stock market, again, I'm the casual observer, this is where you live, is you never really know what the prick is going to be for a bubble.
Yeah.
And we have a number coming out tomorrow that could be a pinprick, and that is inflation. I saw your reel on this morning on IG, really hammering people on core. I'm going to actually take the headline number and throw something out here that the market is expecting 3.8. I'm 4.
Yeah.
A 4 handle on headline. I think it's going to go up 0.7, not 0.5. So, and that's going to be a problem. And I do think core goes up a couple, not just 0.1.
Yeah. And so maybe I was getting a little cute on my IG reel this morning, but I think that everyone knows headline is going to suck, right? So whether it's a 0.5%, 0.75%, like it's going to be brutal. And we all know it because we all have to fill up a gas tank at some point or heat our home or whatever it is. There is some exposure to direct gasoline, diesel, or oil at some point in all of our lives. But what I'm really concerned about is, okay, we know that's going to be bad. It's how much is that bleeding through into everything? So how much?
That's why core is important. You're right.
Yeah. So once core is right, everyone knows this probably, but you're backing out energy out of that. So you're backing out the oil impact. You're basically backing out the real impact of this Iran war with the direct thing that it's affecting. How much is everything else being impacted negatively? Because everything is a byproduct of oil. Plastics, rubbers, they're all functioning on oil. The delivery of everything, that last mile, all comes from a truck or a van or an Amazon vehicle, et cetera. They're all using oil. So that's really the one that is concerning to me.
Well, that and I think the other thing that's interesting, because again, earlier talking about Iran, do we have a blockade? Do we not have a blockade? Is it open? Is it closed? All of that is, oil is the most acute pain point, but very quickly, fertilizer is going to be a problem. Yep. Helium is going to be a problem. All these other inputs are going to be a problem. And if we haven't learned anything from 9.1% inflation, yes, growing M2 money supply was a problem, but the real problem is we fucked with our supply chain, right? And now we're potentially impacting our supply chain on lots of fronts. And I don't think the market is looking at it. Back to our earlier point, stock market's open, it goes up. We could have some sneaky supply problems, coming. Is that reasonable?
Oh, it's completely reasonable. It's funny how many people, myself included, have experts on like what goes into or the production of a chip product, and helium is involved in that. And apparently we're sourcing helium from the Middle East. Like I would have had never known that, but it's good that people are doing good research and bubbling this stuff up, because now we're all more aware of this. It is every time you have a big macro kind of geopolitical event and tension, it's funny how the market can so easily overlook it. Like we're literally at war right now, and the market is hitting new highs every single day. And what it goes to show, I guess, at the end of the day, is like corporate America and the US consumer is really largely not impacted by all of this. And that's not to say that is the uniqueness of our country, I think, because all the other countries around the world are getting massively more impacted by what we're doing in the Middle East than we are, because they are so energy price sensitive, and we are not as much so.
Yeah, I don't think we had this conversation because we missed last week. So as you know, I was on a cruise in Australia, and I kid you not, one of the sea days, there's a big screen outside by the pool, right? And they're showing an oil tanker pulling into some port in Japan that came from Louisiana, right? Because again, if you're in Japan, usually it comes through the strait. And this was such a big deal to Japan that they were blasting it on some news channel, because I guess Japan was that short of oil. I mean, that's just, you know how telling it has to be that you're actually have a helicopter, tracking an oil tanker to port. That's wild to me.
And the Prime Minister of India just came out today and started encouraging people, you need to start cutting back. You need to voluntarily cut back for the betterment of our country.
Yeah.
Lorenzo Modi. Yeah.
And their stock, Modi, and the stock market bled. I mean, that if they're saying cut consumption, do all these things, that's this, to your point, we are insulated from what we're doing in the strait mainly, right? We're not, we're going to feel it last. And, Asia and Europe are in a bad spot.
It's funny. A client of mine reached out recently, and they were like, hey, if we're oil independent, we're actually exporting more than we're importing. why is it that we're seeing gas prices jump as much? So they were basically asking the other end of the spectrum, like, hey, I'm hearing this news that like we got all the oil in the world and this shouldn't impact us. It's like, well, but at the same time, if the Far East in Japan now is buying from Louisiana, whereas they might have been buying out of this is a global market. So it's
a global market. They'll just sell it to somebody else. Yeah.
Correct. And that's why like a lot of people have become, experts for the first time on Brent oil versus West Texas, myself included. Yeah. Right. So it's funny when you start to think about how the spotlight is shown on certain things, given certain pressures out there in the markets. But no, it's interesting to watch.
Well, the other thing I wanted to ask you about AI, and we'll go to Mamdani next, is I'm hearing some people talk about this being very similar to the railroads, very similar to electricity, very similar to the DSL lines of the .com era. And what I mean by that is all of these AI investment dollars are coming fast and heavy. There's no real dollars or return on investment from them. And this is going to lead to a debt explosion, especially since unlike, railways and highways and all of that, these assets, they don't last very long, right? 4-6 years, depending on who you talk to. You got to you got to redeploy these things. Do we have a growing debt problem with all this financing?
I think it's interesting right now because I think that we do not have a debt problem now. What we have is a little bit of a gamble being played. So these companies, these hyperscalers are at a race. And I think the prevailing wisdom is that there are going to be a few winners in this. And if you're not a winner, you're going to get obliterated. And so all these people are saying, hey, we'll spend on whatever it takes to be a leader in this space. And some of them, like Meta, like we talked about before, really don't even have a clear line as to what they're doing here. But they've got to participate because if they don't win this agentic AI and capabilities before everyone else, they think they're going to get absolutely smashed. But they do not. So it's a bet that profits are going to come. And it's going to be narrow at the top. It's already narrow at the top. I think it's going to get narrower at the top. And so as these people continue to fight for this predominance in this agentic AI that doesn't exist yet, the bet is long-term, there's going to be a few winners. And if you don't spend right now, you're not going to be a winner and you're going to get crushed on this. But that is a bet. An educated bet, maybe.
Yeah, it's interesting. Do you know a gentleman? Have you heard of a gentleman named Scott Galloway? He's written a couple of books. He's a billionaire. I think he talks a lot about young men and all of that. That's where I think he got his heyday. Anyways, I saw a reel of him yesterday articulating how China can destroy the U.S. economy. I'm like, oh, interesting. What's he think? So you probably know this, but for the audience, back in the day, China was dumping steel, which was really hurting the American steel manufacturers, right?
Yep.
And then we eventually had to create anti-dumping, but not until a lot of the pain had already been felt by the American steel industry. You remember this?
Yeah, absolutely.
Okay. So what Scott is saying is if China wanted to destroy the U.S. economy, all they had to do was basically release cheap LLMs, cheap AI models, basically dump AI models into the U.S. economy at such a price point that is ridiculous, thus making all of these other debts not, you can't get a return if you're competing against zero or a penny or whatever, which I thought was interesting. Because again, I could see how that would be a problem, right? You have China's central government sort of managing a lost leader. You go out there and you destroy all of these LLMs. You got to compete on price. And then all this debt that you've racked up, you can't pay for. That could be a problem.
Yeah. That's DeepSeek, effectively what they're talking about there. Right.
Yeah.
And it is interesting. What China does really well is they prepare for long-term things that are around corners that we can't see. Yeah. Right. So like their strategic petroleum reserve was 4 times as large as ours going into this. Yeah. So we are actually, I think, going to fare better even given that fact because we have energy and they really don't for the most part. But nonetheless, they were prepared for this. Right. And they think about things in decades. They don't think about things in 4-year cycles, which is what we do, or even 2-year cycles because of the midterms that we hear here in the States. So you are 100% right. And I'm speaking out of turn here. I've never been in China, but so like, let me be clear on this. They don't care as much about their citizens, right? So they are willing to cast pain.
Central planning is central planning. Yeah.
Right. So they're willing to cast pain down to become that world dominant leader. Will it work in the fact that, hey, they release these large language models, all of a sudden they are better or cheaper or a combination thereof versus all the big tech giants here in the United States? It's like, well, what cost did they have on their end that allowed them to do so? That also needs to be explored. And who knows what that is?
I don't think they're going to care. I mean,
Yeah, that's
again,
fair.
I don't know
that's
that
they're
fair. Doing this. I just thought, yeah, I don't think they're going to care. I just thought it was an interesting riddle that I had not thought of. Right? Again, if you are China and if you wanted to hurt America, it's take our largest current investment in debt cycle and this make it worthless or near zero, and that would be problematic for sure. So again, we'll see where this goes. Well, let's turn to Mayor Mamdani. You are obviously in New York City. He is squarely coming after success, wealth, business owners. He stood outside Ken Griffin's apartment, or penthouse, which I still can't believe he did in this environment. I mean, the UHG CEO was killed 5 blocks away. Total stupid thing to do. Put Ken in that crosshairs like that. But yeah, I'm curious. You obviously are on Wall Street. You got a lot of buddies on Wall Street. You got lots of buddies on Wall Street. How many folks do you think actually look at this and go, we out, we going to Florida, we're going to Nashville, we're going to Texas? Or is that just talk?
For some, it's talk, but I think that there is this naivety that people need New York City. It's like, well, they're like, hey, you need that tie to Wall Street. You need that close nature. You need all of those things so you get that insight and that insider information. It's like, well, the best guy to ever do it was based in Omaha. So like,
he's in Omaha, right? He's a couple of states away.
Yeah. So like, let's temper this, right? Information gets everywhere unless you're a high frequency trader, which that's not what Ken's doing. That's the only place where you absolutely have a necessity where you must be pinned to the metro area of New York City. What's annoying or disappointing is just that, listen, I get that this K-shaped economy causes real pain and real strife. And that does not fall on deaf ears with me. But I think just to go out and fault the billionaires that are driving the jobs, that are driving a lot of the tax dollars. Ken said, listen, we're going to do this Midtown Manhattan project that's going to generate 6,000 construction job and 15,000 permanent jobs. Now that's all up for debate because this guy went out and went at him directly as a person, not at nature or class of people. He stood literally outside his apartment, called him by name. Yeah. And Ken said, listen, I have no interaction with him. No former kind of back and forth that caused this, for me to be this political puppet, but that's where I wound up. So, I mean, it's tough to look at and say, okay, if we think that we can just do whatever we want, call people whatever we want, say whatever we want with no retribution, and then, by the way, you're going to charge them more money after calling them idiots to their face, and they're just going to be fine with it and not move their capital. Like, the best thing about capitalism is money goes where it's best served, where it's best treated.
Amen.
And that's just not right now in New York City.
Oh, it's not. I mean, clearly not New York City. One has to wonder if he's doing this on purpose and he's just a secret genius trying to destroy New York City, but that's a different discussion. So these are things that I've heard, and I want you to say, fake news or not. So the first one I think is pretty true because I've actually saw Ken say this. Basically, the only good move we've made or the only move that feels right is, our move to Florida. And he's doubled down. He's building more office space in Florida. So again, you could translate that to more Citadel employees being in Florida in the next couple of years. Fair?
Undoubtedly, 100%. Direct words from his mouth.
100%. All right. Yeah, direct words. The next ones I've heard, but I can never tell if it's fake news or not. Again, I think this one's true because I think I heard JP Morgan CEO say this. I think he said something to the effect of, when I started here, we had 40,000 people in New York, and now we have 32,000, so down 20%. Texas, kind of the reverse of that. Is there any talk of Jamie Dimon, doing that even more, or just current is as current goes?
I think as we get more of listen, we've gotten more global from a landscape for the past 30 years, right? Now we're trying to get more towards the US. I get that. But nonetheless, information is disseminated so quickly. So to think that someone's ball and chain to a city because it has a New York Stock Exchange on it or it has Wall Street on it, like, I don't understand where any of that is. And I think that at some point too, young people that are going to be the high income earners, that are going to be employed by these people, they start to get less excited about making that pilgrimage to New York City for that 25 to 30-year-old time frame of their life. And so the talent is there now, but does it continue to be there now if they realize, hey, I go to a different state, I can save 15% of my income that I'm going to get paid. You don't have to pay me as much.
Yeah. Right. No doubt. I believe Apollo was the next one that said, hey, we're going to open a second headquarters. So Apollo is going to be quickly moving employees out. That seems to be true as well.
Yeah. Yeah. I mean, listen, Ken did this in Chicago, right? With Citadel.
Yeah. Oh no, he did. Yeah.
So this is nothing new. And he, Florida doesn't suck.
Yeah, no doubt.
It doesn't, right? The weather's incredible. Like in New York, man, the thing that people will miss about New York is I think the culture. The culture is pretty incredible. It's a cultural melting point. It is an energetic environment, et cetera. But when that energetic environment and that stress of day-to-day life, like it's a tough place to live. Let's call a spade a spade. I live in a town now outside of New York City that's a few hours north, and we get a lot of ex-New York City folks coming up here. And I lived in the metro area for a number of years too. And when they finally move up here, they're like, wow, this is so comfortable. And they're like, it was a rat race. And they think that they love it until they step outside and they're like, what were we doing for that 10, 20-year period that I lived there?
Yeah. Yeah. So the other thing I think is interesting is I heard a number, something like the top 1% of New Yorkers pay, I don't know, 35, 38, 40% of total state taxes. What, if that's true, and it's going to be close, I think, do you think half of those people, a third of those people don't call New York City their home in a year? Because again, capital goes where it's treated best. I could not imagine being a top 1%er in New York and being public enemy number one. I'd be like, the last thing I'll say is what's the point of having FU money if you never say FU? I mean, really?
Right. Totally. I think it's a slow bleed. I don't think anything happens quickly when it comes to like major life decisions for folks. At the end of the day, like, if I could uproot myself, my family, my friends, et cetera, and all collectively move to Tennessee, I would do it in an absolute heartbeat. But that's just not reality. Right. And I'm not going to move with my family coming along with me, and they're not all going to be able to simultaneously move at once, et cetera. So I think it's a slow bleed, but nonetheless, it is a bleed. It is something that there is no, if you just look at surface value, face value of New York State, what is it that makes it so great that we're able to charge 10% more for people to live here? There's nothing you can say, yeah, this is the reason why. There's nothing. It's just that there's history here and people live here, and that can't change quickly. That does change over time.
Yeah. Didn't Kathy Hochul say one time a couple of years ago to the rich that are leaving, basically buy? And didn't she recently say, hey, could you come back and bring a friend? Something like that?
Well, Kathy Hochul is all of a sudden starting to look like this, like, right mega Trump hat wearer relative to Mamdani on the other side. And Mamdani, I don't want to say to his credit, because again, I'm not right, I'm not left, I'm just not a socialist. And so like maybe that makes me not like the furthest left ever, right? So maybe that's a fair assessment.
Yeah,
but
you're not a socialist, that's fair.
Yeah. So he came out and said, like, listen, we want everybody to be here in New York, even Ken Griffin. Like afterwards, but it's like you can't go up the way you went about it.
See, I want to push back on that, because I read when he tapped the thing. I'm like,
oh my God, you're doing things that you shouldn't be doing right now.
Yeah, you shouldn't be doing that. But so again, I saw that kind of I basically a quasi apology to Ken Griffin video, but it wasn't. He basically said, I need people like Ken Griffin here. I need successful people here. I need them to pay more so everybody else could live here. He's still basically saying, I'm going to reach into your back pocket and take your money. I don't get it.
Where is the logic to that? There's no logic to that. And I'm going to be an asshole to you in the meantime. Like,
yes, I'm going to call you out.
And listen, at the end of the day, I get the lower shape of the K. Like, one of the big arguments is like, hey, billionaires don't pay their fair share of taxes. One, when you look at the absolute dollar amounts, like obviously they're paying more than their share. But when you look at things and you hear Buffett say things like, hey, my secretary paid more in taxes than than I do. Like, and people get mad at the billionaire. Don't get mad at the billionaire. Get mad at the government, right? The government is the one that structures those underlying tax codes. Don't be holier than thou and say if you were a billionaire, you would just go out and rightfully, willingly pay a full chunk of taxes. You're going to look for every way you can save money as well. That's so the villain of the billionaire is really a tough one for me to understand.
Well, the other thing I think that's come to light here in the last couple of years is just the amount of fraud, waste, and abuse in the system. And, until you have an honest review, and I've seen estimates as low as 15% and as high as 40% for the amount of waste, fraud, and abuse in our current spending state and federal level. Until you have an honest assessment of that and start getting rid of these NGOs and all this other graft, why should we pay another penny? You're not using the money we give you now well. And until you prove that you could spend our money well, why would we give you another dime?
Well, so I've long been working on just how to package this correctly and put out a video on comparing New York, where I live, to Florida. Because Florida, you pay 0% state income tax. And in New York, you pay 10 and upwards of 10 if you are, a wealthy individual. And so what are the redeeming things that we are getting back for that additional 10%? And you look at the school systems, and basically across the board, you have very comparable, if not Florida getting an edge in the public school system on their rankings.
Yep.
You look at things like poverty rates. Poverty rates are higher in New York than they are in Florida. So the whole, hey, we have a social safety net, and they don't. Well, there's holes in the nets apparently because they have a lower poverty rate than we do. And so you go down there and it's not like, hey, their roads are decrepit. Their state funding is much better. They have a higher credit rating than New York does, even though they're not collecting that additional 10%.
Public safety is better. Yeah.
There's nothing you go, okay, that is why I pay 10%. And that's frustrating for someone who lives here, to state the obvious. You tell them a little perturbed. Yeah.
Yeah. At the end of the day, this is really interesting. So let's go back and we'll close on inflation because that's the big number of the week. It's really going to be the big number for the next couple of weeks. The jobs numbers came out last week, and I don't know about you, but they were fine, if not better than fine. So, no rate cuts in 26 seems to be more and more likely. How bad do you think inflation's got to get for the Fed to raise rates? Do you think a rate increase is even in the realm of possibilities in 26?
It started to become, it started to become. I don't think that it's reality, but the longer this thing persists, and
not
again,
zero.
It's becoming not zero, right? And Warsh coming in, he doesn't have the votes to cut. Like that's obviously what Trump wants.
No, he does not.
He doesn't have the votes to cut, so that's not happening. One of the things that I did see that was a little bit of good news recently is the JOLTS report. So job openings, that number has basically been flat. But what you're actually getting is a little bit more of the actual jobs being filled. So when you peel back a little bit there, that was a good number. But for all intents and purposes, the labor market's meh, right? No hiring, no firing is basically it. You saw a little pickup in jobs being filled. But we're in a steady as she goes where the big outlier right now is inflation. And you're 100% right. We're going to get a look through to that tomorrow. The headline number is going to be ugly. You think it's going to be really ugly. And the core number is the one I'm concerned with because we all know the headline number is going to be ugly. It's how much is leaking through into everything else we buy on a day-to-day basis.
Yeah. And then when I look forward, we have one more. Again, one of the reasons I think the number is going to be so ugly is because of the very small base effect, right? We're basically dropping off, I think, a 0.1. Yeah. Next month is also small. Then it gets a little bigger from there. But, the longer this strait stays closed and we're not essentially having 20% of the oil shipped through this, it eventually has to come through in a big way, even here in America. So again, we've either got to get this thing open or, resolve this thing somehow, I think.
It's just one of those things where, like, from a market standpoint, it's not going to matter. It's not going to matter. It's not going to matter. It's going to resolve itself, or it's not going to matter. It's not going to matter. It's not going to matter. It doesn't resolve.
It's a problem.
It matters all at once. Yeah.
Yeah. It's I forget the saying. Basically, it's not a problem until it is a problem. And
exactly.
So I think that's where we are. I think this is going to be the first month that we print a nasty number with a 4 on it. People are going to then say that's the worst of it, blah, blah, blah. And then next month's going to, take us to 4.2 or 4.3. And They're going to have to look at that. So my long stance really for the last 8 weeks is the Fed is going to be put into a corner where they have to raise rates. That is going to prove to be a problem, a mistake. And then they're going to get on a rate cutting cycle because that will be the push into a recession. I think frankly, we're repeating 1998 in the Fed, and 1998 was not a fun year.
So you're thinking they're going to chase their tail, which, to your point, is not the first time that'll happen.
That's not the first time. Again, I think the Fed was, the 8-4 vote, right? The last Fed meeting, the first time that happened since, I forget, 1998 or somewhere. And I think the Fed talk since the Fed meeting is all basically telling Kevin Warsh, we're not cutting no matter what you say. You're only one vote. I think you've heard lots of people come out, Hancock, Kashkari, Logan, all basically saying, a rate increase is on the table, not a cut. So I think the Fed's going to be forced to raise probably after next month, and then that will be the straw that breaks the back, and problem happens from there.
Yeah, and one of the things that every market pundit is saying these days is almost direct quote of this: the market tests every new Fed chair. And so something gets thrown at them that makes them react. And then the market starts to understand the way they react, like it, not like it, get used to it kind of thing for a period of time. So we'll see what that might be.
There you go. Well, Taylor, you're amazing. I appreciate you coming back each and every week to talk to us. Help me get away from the edge, because I really was having PTSD from the stock market. It felt so much like the dot-com era. I feel a little bit better, but I do appreciate Paul Tudor Jones telling us, let me get the quote, the current environment feels very similar to 1999. So anyways, where can people find you?
Yeah, find us on Instagram, find us on TikTok, find us on LinkedIn. We're at Life Goal Investments.
Awesome, buddy. Appreciate you guys. If you're not following him on Instagram, Life Goal Investments, you're missing out. He puts about 5 to 10 minutes of value into a 60-second clip. I have no idea how he does it, but he is consistent. You're amazing. Take care.
Thanks, man. Quick ask. If you're enjoying the show, hit the follow and drop a rating. It helps more folks find our podcast. Thanks so much.
The information discussed in this video is for educational purposes only and should not be considered investment, tax, or financial advice. Investing involves risk, including possible loss of principal. Always consult a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.